Hi, this is Kratos here at Value Line, and I'm joined today by senior analysts Alan House and Sharif Abdu. Today, we're going to provide an update on the economy and the stock market. We will then recommend our one stock to buy right now, and finally, answer as many questions as we can. Please note that this presentation will be available on our website, www.valueline.com, and on our YouTube channel within the next 48 hours or so. All previous webinars are located there as well. Before I jump into the heart of the presentation, for those joining us for the first time, I would like to provide a brief overview of who we are at Value Line. Excuse me. We are a New York headquartered corporation that has been providing investment research for more than 90 years. Our flagship product is the Value Line Investment Survey. This service, available as a weekly updated printed publication or digitally, is a unique source of financial information and is designed to help investors make informed investment decisions that fit their individual goals and levels of risk. The survey includes data, charts, and analysis on equities that trade on the New York Stock Exchange, the NASDAQ, and the Toronto Stock Exchange. It also includes economic commentary, easy-to-follow model portfolios, stock screens, industry-based analysis, and much more. This service, which is published weekly, is created by Value Line's research department, which is comprised of nearly 70 analysts, economists, data experts, and quantitative specialists. One thing I want to stress is that our research is completely unbiased and independent. Unlike many Wall Street brokerage firms, Value Line has no investment banking relationship with any company, including all the equities under our coverage. Value Line does not execute trades for its subscribers and therefore has no vested interest in whether our subscribers buy, sell, or hold a specific equity. What's more, our staff of professional securities analysts are not permitted to own shares of any company that they cover. If you have any questions about the products or services we offer or our different tiers of subscriptions, that information can be found at valueline.com, or you can call 1-800-VALUE-LINE. Now, let's discuss the economy and the stock market. This content was prepared by Value Line's economic staff. The nation added an estimated 227,000 jobs in November. That tally exceeded the consensus forecast of 214,000. It was a big recovery from the hurricanes and worker strikes that impacted October's gain of just 36,000 positions. The two prior months' jobs totals was also revised higher by 56,000. Overall, the November employment and unemployment data painted a mixed picture. While job gains was encouraging, it was accompanied by an uptick in the unemployment rate from 4.1% to 4.2%, and a drop in the labor force participation rate to 62.5%. The decline in the latter metric indicates that smaller percentage of the working age population is either employed or actively looking for work, which can suggest that the labor market is weakening. On point, the nation has added an estimated 143,000 jobs per month over the last 6 months, which is below the pace of 200,000 that is considered to be indicative of healthy growth. Meanwhile, inflation has proven a bit sticky this fall. The Consumer Price Index, or CPI, increased 0.3% on a month-to-month basis in November and was up 2.7% over the last year. Both those figures were above October readings. The core CPI, which excludes the more volatile food and energy components, rose 0.3% and 3.3% on a month-to-month and one-year basis, respectively. Matching the prior month's figures, but also not showing signs of additional progress in slowing the pace of price growth at the consumer level. Yesterday, the Interest Rate Setting Committee of the Federal Reserve System announced a reduction in the benchmark federal funds rate by a quarter point to 4.25 to 4.5%, the final monetary policy meeting of 2024. Recently, several Fed officials have expressed caution on cutting rates too quickly, and Chairman Jerome Powell once again said that continuous reductions should not necessarily be assumed. However, central bank lenders have been hinting that they could pull down rates at a slower pace than previously anticipated for 2025, given an expanding economy that continues to be powered by the strength of the consumer sector. According to the National Retail Federation, holiday spending is expected to reach a new record this season, with shoppers estimated to spend an average of $900 per person on gifts, food, and decorations. Many of the key elements, including a more accommodative Federal Reserve, remain in place for another late-year Santa Claus rally. Please refer to the inside back cover of Selection and Opinion for our statistically based asset allocation model's current reading. On that note, Value Line provides a great deal of information and analysis to help our subscribers. And we know that most of our users depend on our weekly stock reports, time-tested ranking systems, and other valuable services. In addition, Value Line provides a great deal of daily content on markets and individual companies that can help you avoid pitfalls and profit during this volatile time in the stock market. Every business day, senior members of Value Line's research department review the most actively traded stocks, company press releases, news stories, trade periodicals, other sources for data and information that may change our view and investment recommendations for specific stocks. When something noteworthy crosses our desk, we immediately publish a supplementary report that outlines the new information and, importantly, what it means for the stock and shareholders. This content is posted throughout the day on our website. Again, that's valueline.com. I will now show you how to access it. Once signed in, head to the dashboard where I'm already located. This is the main landing page for subscribers, and under the quick links, click on Supplementary Reports. As you can see, the research department has been busy publishing our updated thoughts on stocks that we track. We strongly suggest that subscribers visit this page often. Some individual companies incurred a lot of debt or sold a lot of stock to improve liquidity over the last few years, especially those dealing with sharply reduced demand for their offerings and supply chain problems, among many other issues. During the changing structure of company balance sheets, Value Line continues to review our proprietary financial strength grades for the stocks in our coverage universe. These changes are posted each week in our Selection and Opinion newsletter. For those of you who don't know, financial strength along with price stability are two metrics that are considered in calculating a stock's safety rank, a critical measure of risk. When considering a new stock to invest in, we strongly suggest that you utilize the financial strength and safety in your decision-making process. For more information in regard to our proprietary ranks and ratings, Value Line provides a user guide that can be accessed via the investment education section of our website. Lastly, this is a good time to mention that the case for individual stocks is quite strong over the broad index funds, as many less talked about stocks are available at much more reasonable prices. Now, let's move on to the one stock to buy right now. For this, let's go first to the screener. Value Line subscribers have access to 15 preset screens and 50 fields. I should also mention that another 100 fields or so are available through a higher level of subscription. If this interests you, again, please call 1-800-VALUE-LINE. The current economic environment remains uncertain, marked by inflation, worries, geopolitical concerns, and speculation on how far Washington will go in its economic policy changes. Many large, well-known stocks have grabbed headlines lately, but we would like to search for other equities with better long-term potential with acceptable risk profile. Let's start with industry rank in the top 10. We're going to focus on stocks within industries that are among the top 10 ranked industries in the survey. By applying this first criteria, we've trimmed away our potential candidates down from about 5,700 to 359 candidates or so. Next, we'll do a timeliness rank of 3 or better. This figure is a measure of risk and is on a scale similar to that of, the timeless rank is used to produce the relative 6 to 12-month performance of stocks in the Value Line universe. The format is easy to understand scale of 1 to 5, 1 being the best performing issue on a relative basis. Most often, stock buyers will want to avoid stocks ranked 4 or 5 after running this screen. We're down to about 140 stocks. Next, let's go to the safety rank of 3 or better. This figure is a measure of risk and is on a scale similar to that of timeliness, with 1 being the best and 5 being the least. We're now down to about 120 or so possibilities. And finally, we'll go to the 18-month TPR midpoint of 30% or better. Now we want to look over the intermediate term, and that's what the 18-month TPR is for. The 18-month investment horizon. Scrolling up to company data section, we focus on stocks with an 18-month appreciation potential of 30% or better, which is well above the midpoint of our 18-month TPR, which is currently 13%. By applying this screen, we've chipped away at the list, and now our list of prospects has 33 candidates. This screen provides us with stocks whose earnings So earnings predictability is our next filter. With an earnings predictability of at least 80, this screen provides us with stocks whose earnings are less susceptible to surprises and therefore subsequent declines. In theory, our list of candidates is now down to 11. and they are Booz Allen Hamilton, Brinks, Top Build, CDW, Comcast, Eagle Materials, Huron Consulting, Installed Building, Lululemon Athletica, Simpson Manufacturing, and YPro. You can make a strong argument for any of these remaining candidates, which span a number of different industries, and investors interested in adding a new position should consider them. However, only one can be today's one stock to buy right now, and after consulting with our senior analyst, they've come up with a recommendation of Comcast. Before I click on Comcast, please note that the screens can be saved and revised by utilizing the Create Saved Screen button at the top. Comcast is a global media and telecom company. It derives roughly 2/3 of its revenues from broadband, TV, and telecom services, and 1/3 of revenue from entertainment assets, including a production studio and theme parks under the Universal name. It is currently in the process of looking to divest its cable assets by the end of 2025. It's ranked 3 for timeliness and 1 for safety. It is poised for stronger profitability in the coming months, and the stock can form one of the building blocks of a successful portfolio it's today's one stock to buy right now. We'll now tackle your questions, but please note that we typically can't answer complex questions about specific stocks on the spot. For this, I recommend a review of our latest reports. The first few questions were submitted prior to this presentation, and now I'd like to hand it off to Alan and Sharif, and I'd like to wish everybody a happy holiday on behalf of all of us here at Value Line. Alan, take it away.
Thank you very much, Kratos, and thank you all again for joining us today. The first question that came to my attention was, could you please describe the timeliness ranking system in more detail? And that's an excellent question. The Value Line Timeless Rank measures predictive relative price performance of the approximately 1,700 stocks during the next 6 to 12 months on an easy to understand scale from 1 highest to 5 lowest. Components of the timeless rank include such items as the trend of relative earnings and prices and earning surprises. All data are actual and known. A computer program combines these elements into a forecast of the price change of each stock relative to all of the approximately 1,700 stocks for the next 6 to 12 months ahead. Subscribers should focus on companies that are ranked at least 3 or better for timeliness. We update timeliness ranks weekly, so investors should pay close attention to stocks they're interested in. I'm going to show you now how to access that on our website. You start out by going to the dashboard, which is where I am right now, and under Traditional Online Access, click Investment Survey. Under Investment Survey, click under right here, Rank Changes. As you can see, each week we have numerous stocks moving up and down in rank. So you could just click on these for all the rank changes. That's on a weekly basis. You can see right here, this is our most recent. And this is done each week. So if you want to keep up to date on any timeless ranks changes, that's how you assess it on our website. Thank you.
Okay, let's see. We got a question in advance that is, it's an oldie but a goodie. This is a question that we actually get frequently. The question is, what is financial strength? So I'll break it down like this. A company's financial strength is a measure of its overall financial health and the company's ability to withstand economic downturns or adverse conditions. The metric is crucial for investors to consider because it indicates the company's capacity to meet its financial obligations, its ability to manage its debt, and to fund its operations without excessive risk. Okay, so when we come up with our proprietary financial strength ratings at Value Line, we consider a few things. There's a few important components. One is the balance sheet health of the company. And within that, there are a few things we look at. We look at the debt levels of the company. That is the amount of debt that the company has relative to its equity. We also look at liquidity. That is liquid assets the company might have to meet its short-term obligations. We also look at the asset quality. That's the quality and valuation of the company's assets, including cash, receivables, inventory, etc. So that's the first component of financial strength. The second component is the cash flow that the company generates. That can also be broken down. So we look at operating cash flow. That is the cash that is generated from the company's core business operations. That's crucial because that's how the company funds its day-to-day operations, and it can reinvest in the enterprise without needing external sources of funding. We also look at free cash flow. And that's the cash that is remaining on the company's ledger after capital expenditures, and it indicates how much cash the company has available for dividends, debt repayment, or reinvestment, etc. So those are the first two components of financial strength. The third is profitability. We look at a few things within profitability. We look at the company's earnings stability. That is, how consistent is the company at generating profits, and the return on equity. That's a measure of how effectively the company uses shareholders' equity to generate profits. The fourth component of financial strength is the credit ratings for the company. These ratings are provided by the credit rating agencies. These are names you're probably familiar with. They're companies like Moody's, Standard & Poor's, or Fitch. This is an assessment of how likely the company is to default on its debt. Obviously, the better the credit rating of the company, the better it is the financial strength. And the fifth and final component of financial strength that we consider when we come up with our proprietary ratings is the capital structure of the company. And by that, we mean the mix of debt and equity financing used by the company. The stronger the financial structure, that usually means that the company has a lower proportion of debt to fund its day-to-day operations. Now, why is financial strength important? A company with strong financial strength is generally more resilient, okay, when we have economic downturns. It also means the company might be better able to take advantage of growth opportunities, right? They have the dry powder, they have the funding and the borrowing capacity to take advantage of growth opportunities when they present themselves. It also means the company is less likely to face financial distress, when times get a little bit tough. Conversely, if you have a company with weak financial strength, it might struggle a little bit during tough economic times and could be at risk of bankruptcy. So I hope that answers that question. Let me see. We had one more question that was submitted in advance that we thought we would like to touch on. Actually, this question was submitted during the presentation, and it is about Comcast in particular. So let me see. Okay, the subscriber asked, can you tell me what is streaming? Which I understand Comcast offers through its Peacock service, and it is different from what they would deliver on demand through their local Xfinity traditional cable television systems. Okay, so in a nutshell, the subscriber's asking, what is streaming, right? We all hear about streaming. What is streaming? What does that mean? So you have inexpensive streaming services like Peacock, okay? And then you have premium offerings such as HBO, for example, or Netflix. HBO and Netflix require monthly subscriptions with a group of entertainment offerings focusing on specialty services like original drama, series, and sports. Internet connection. Yeah, I mean, streaming really is just the ability to get content rather than over the air or through cable television service. It's something that you're going to subscribe to on a month-to-month basis. And it's accessible from different types of service, different types of different sources. You don't necessarily need a set-top box that sits on top of your TV in the traditional sense. You can access streaming services on your smart TV. You can do it through a set-top box. You can do it on your smartphone. You can do it through a tablet. It's a little bit more free. Let's put it that way. It's a little bit less locked down, and generally it's done on a month-to-month basis. Alan, are any other questions jumping out at you?
Thank you, Sharif. I don't see any other questions at the moment. We'd like to thank you all for joining us and wish you all very happy and healthy holiday season and all the best in 2025.